Basically, this is a strangle selling strategy, and it could be directional or non-directional depending upon the day, right? So what we are doing is, for example, market starts at 9:15, as you all know. So at 9:30 a.m. we are now going to sell strangle. So what does strangle mean? This is an backtest of bank nifty. So we are now uh, taking off bank nifty only. For example, at 9:30, if bank nifty is trading at 35,200. Okay, so if this is the price of bank nifty at 35,200 at, for example, 9:29. So at 9:30 what we are going to do is, we are now going to sell 35,700 call. Okay, and we are now going to sell 34,700 put, right? So this is a non-directional strategy basically. Now what we have done is, we think that the market is going to stay in between this 500 point range. So what is going to happen? It could be like that key market moves directionally in one side, or it could be up or it could be down, so we do not know. So we are now going to keep stop loss on each leg, that is 25%, and here also we are going to keep a stop loss of 25%. So what does 25% mean? For example, if at current market volatility, the 500 points up, the call option is trading at around 250 rupees, and the put option, that is 500 points down, is trading at 300 rupees, right? So if we have to keep a stop loss of 25% on this and a stop loss of 25% on this, so what does that mean? That means we are keeping a stop loss here at 375 rupees, and here we are keeping a stop loss of 25% on 250 rupees. So what does that come out to be? So that comes out to be at around 62 rupees or 65 rupees. Okay, so this will be 315 rupees will be the stop loss for this leg, and 375 will be the stop loss for this leg. So why 25%? So depending upon the number of backtest, I found 25% as an ideal stop loss, because this would give us enough room for the volatility to play it out, right? So if you keep a bigger stop loss, then your profits will reduce a lot, and if you keep a smaller stop loss, then you will get multiple stop loss hit and you will not be in the trade for a bigger period of time. So 25% is the ideal number that I have got after multiple number of back tests. So we are keeping a stop loss of 315 on one leg and 375 on one 375 on other leg. So इसमें क्या होगा? अब हो सकता है कि if the day is directional, okay, if the day is directional, then one side stop loss may get hit and other side stop loss may not get hit. So what is the strategy all about? If we are buying if we are shorting a call option, or a put option of 300 rupees and a call option of 250 rupees, right? So this is PE and this is the CE, right? Now if one side stop loss gets hit, that is around 375 here, and here 310 rupees. So if one side stop loss gets hit at one side, then we are now going to shift the stop loss from 310 to back to cost. Okay, so we are now going to shift the stop loss of 310 to back to cost, so that the maximum we can lose is on a single leg, and we are going to keep this leg open for the whole day till 3 p.m. for the directional move. Okay, what will happen if one side stop loss gets hit? For example, if put side stop loss gets hit, that means the market is falling that day. So what could happen? There could be two things that are happening. There could be three things, sorry. One could be, if market reverses after hitting our stop loss, then we have moved our stop loss to cost, so maximum we are going to lose is 75 rupees per lot, right, on single lot. Second thing is, if market continues to fall, then at the end of the day, whatever the profit will be on the call option side that we have sold, we will be covering. Or if market stays sideways, whatever will be the profit by end of the day, we will be keeping it with our selves, right? So by moving the stop loss to cost, we are avoiding bigger drawdowns, as the backtest suggests that moving the stop loss to cost will have a lesser drawdown compared to just keeping this leg open till the stop loss gets hit. So let us look at the live charts here. Let us now backtest the strategy in StockMock platform. This platform is used for backtesting, and you can only backtest freely for 1 month. But then if you want to backtest the whole data for 5 years, then definitely you'll have to pay some amount of money. So I have taken the paid subscription. Now what is Strangle? Basically, as I had mentioned, we are now selling out of the money OTM call and OTM put, right, as we had discussed, right, in this beginning. So we are now taking the ATM at 9:30 a.m., right? At 9:30 a.m., whatever will be the at the money strike price, then we will sell 500 points up call and 500 points below put option. So we have discussed with stop loss as 25% of each of the both of the legs. So for example, if both the calls and the put are at 300 rupees, for example, right? So the stop loss for this will be 25% of 300, that is 375 rupees, as we are shorting it. And for the stop loss for this also will be 375 rupees. Now in any case, if one of the stop loss gets hit at, for example, of this side, we are going to shift the stop loss of 375 to back to 300 to cost only. Because for example, if this was 300 and it has moved to 375 rupees in quick succession, so this will also be at around 250 rupees, right? This will also be at around 250 rupees, depending upon the how fast the move has happened. So if this is at 250 rupees, we are going to shift the stop loss of from 375 to 300 rupees at cost, so that maximum that we can lose in any case is the 75 rupees in this scenario. And because we have backtested, I mean, I can show you, I will show you the result where if we move the stop loss from 375 to cost, then the drawdowns will be very less compared to the same scenario where we keep the fixed stop loss and just hold the trade, right? So here we are keeping the stop loss at 25% for each of the legs and move SL to cost. This means that if one leg stop loss gets hit, the other leg's stop loss will be moved to the cost, so that we are now we are not going into big drawdowns, right? So I have mentioned here, now entry time will be 9:30 a.m. and exit time will be at 3 p.m. 3 p.m., right? So we are not putting any target strategy profit or target stop loss or protect the profits. We are now keeping the system very simple. So if we apply this, definitely now I will start the backtest of the past 5 years. So if we click on backtest for 5 years, right? So let us now backtest the data. Let me move down here, start backtest. Okay, so now as we can now see the backtested data. One second. So the overall profit that we have got, this is only one lot. Okay, so I am explaining it with only one lot. So the overall profit that we have got is at 2,77,182 rupees. Average expiry profit is 1,000 rupees and average day profit is 220 rupees. Max profit and max loss. So if we see average profit on win days is 744 rupees and average loss on loss days is 462 rupees. So here we are almost maintaining the risk to reward ratio of 1:2, where we are uh, whenever we are making money, we are making 750 rupees, that is around 30 points per lot. And whenever we are losing money, we are losing around 460 rupees, that is around 20 points per lot. So that is around 1 is to 1 is to 1.5, right? And we have around 57% win ratio and 43% are the number of loss days, right? So if we look at the strategy here downside, now we have max winning streak of 11 days. That means we have never made a loss for 11 days, and max losing streak for 7 days. That is, we have lost continuously for 7 days. Now what does 0 SL hit means? There were 134 days where both of the stop loss were not hit. Now one SL or one stop loss hit means there were 646 days where one side stop loss was hit, and there were 473 days where both kind of both stop loss were hit, right? So now looking at the this data, we never had any, we had only few months of, one second, we had only few months of loss, right? And that too the loss was limited. Now if you look at this chart, or if you look at this, now we can see the average profit has been increasing over time. So this could be assumed because the overall, uh, what we say, the overall volatility of stocks is increasing from 2018 or 2017 to 2022. So as the market conditions is changing, that is why you see that the profit has been increasing year by year. So if you look at the drawdown, we have, this strategy has very less drawdown, as I have mentioned. This is of per lot, right? So we have to modify it with according to 10 lots or 5 lots, depending upon the capital. So if we look at the cumulative profit over time, now you see that the graph is increasing, right? One second, इसमें हमें क्या दिख रहा है कि हमारा ग्राफ जो है steadily increase हो रहा है. So if we only trade with one lot, that is, if we only trade with one lot that costs around 1 lakh 50,000 per 1 lakh 50,000, then within 5 years we are getting a profit of 3 lakh rupees. So that means the money is getting doubled in 5 years. So if we increase the number of lots, for example, to 10, let us assume if our base capital is 10 lakhs. So if someone is having 10 lakhs capital, then we can uh, trade 5 lots, right? So let us now increase the number of lots here and then backtest it, so that we can now counting the slippage of 2%, राइट. सो अब हमने इसको स्लिपेज को काउंट करा और हम अब इसको स्टार्ट बैक टेस्ट करते हैं. Right now, if we have started the back test, now we see what is the overall profit, what is the overall loss, and everything. So as you know, what we had mentioned is almost, it is the same thing, only we are multiplying the number of lots, right? So average expiry profit is 6,000 rupees average, and the expectancy is 0.48. So expectancy is okayish, not that great also, because expectancy should be at around 0.6, but yeah, this could be managed. And max drawdown recovery period, this is absolutely great, and this is not an issue here. So let us now export this PDF. I'll share the link of the PDF with everyone. It is there in the, yeah. So here we can see with 5 lots how the PNL or how the equity curve will look like from June 2017 if we are trading with only 10 lakhs of capital. It is only simple. Okay, we have not compounded our returns here. We have not compounded our returns, and even this is purely a simple back test, and we haven't used the previous profits that we have made to multiply the number of lots. So this could be very great, or this could increase also, or depending upon how you execute it. So this is of 6 slots. Okay, now sorry, I have backtested it for 6 slots, so that would cost you around 10 lakhs only, and not much.